Welcome back to Christopher Allen Bell, CPA CGFM, also known as Strongman Personal Finance. We got some interesting developments today now, don't we, with Honest My Bonest? That's right. Honest stock has just been annihilated. Now, before we go and look at the earnings, I just want to give a shout out to my boy, Jeremy Lefebvre, who was big behind this stock and really thought it was going to 10x in 5 seconds and got rewarded massively for it. As a matter of fact, here is his Patreon. Please, after seeing the results of Honest, please go to Jeremy Lefebvre's Patreon. It's right here, Jeremy Lefebvre, Stock Market Investing, Modern Long-Term Investing. Pay him $10 a month and join 839 other patrons to learn from the wizard of personal finance, of investing, the next Warren Buffett, Jeremy Frederick, I'll just make up his middle name, Lefebvre. Now, let's go ahead and check out Honest My Bonest, because apparently this company was the future. Oh! Oh, baby! Honest stock is only down 25% today. What happened? Well, they just had earnings, and I think they missed some key important metrics. Now, I briefly skimmed the earnings, right? And I looked at it and I said, okay, this seems like typical honesty, Honest My Bonest. Seems like they lost money like they normally do. And that's it. They had basically no revenue growth. Now, Honest is known for Jessica Alba. Jessica Alba is like the face of Honest. If you go back here, you can see she's all over. Honest, 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 honest. Forbes, honest, honest, honest. Jessica Alba is like the centerpiece of Honest, and they sell skincare products, diapers, baby clothes, basically every clean thing that a modern family would need, they sell. You can see it at Target. Is it at Walmart? I don't know. I don't look for it specifically. I've seen it at Rite Aid, which I think is going to go bankrupt. I've seen it in a lot of places. So the products are real. The company's a real company, and they do pull in revenue, and they are in some major stores. But that's not the problem with Honest My Bonest, okay? The major problem is the profits my offits. So here's the release. March 16th, 2023. Delivers fourth quarter revenue to achieve full year 2022 revenue outlook, okay? Let's look at some of the highlights for the fourth quarter. Revenue growth was 2% in the quarter, okay? Driven by strong retail consumption, 2% strong. Distribution gains and price increases partially offset by a decline in digital revenue. That's right. They have two parts of their business, obviously the digital portion and then the retail portion, Target, et cetera, et cetera. Consumption of Honest diapers, wipes, skin, and personal care increased by 15%. So it looks like a lot of their products are having increased use, but that's not being reflected in revenue. Gross margin of 27.5%. reflected a 250 basis point decline versus the fourth quarter of 2021. So their revenue is barely budging, especially in an inflationary environment. I mean, during inflation, your revenue, if you're like have an essential product, should at least match inflation, at least in my opinion. Their revenue's flat. We'll just call it flat. And their gross margin has declined. Okay, Jeremy, good job, bro. So let's look at the profit and loss. So revenue for the fourth quarter was $81.8 million. What was the loss? Let's see, were they hiding it? Net loss was $12.6 million. So we take $12.6 million. This is bottom line loss. $12.6 million divided by 81.859. And we have a 15% loss margin. What is their historical losses? Because, in a growth company, you at least hopefully want them to become profitable at some point, right? Maybe. No. Okay. Well, we can see their historical losses, negative 26, negative 6, negative 11, negative 21, negative 12, negative 13. Okay, they've lost money every single quarter, and it hasn't improved at all. It's not even approaching profitability. You can see their gross margin has collapsed. Look at the decline of their gross margin. 36, 29, 30, 30, 30. And now in this most recent quarter, 27.5. The more your gross margin goes down, the harder it is to become profitable because it's at the top of the income statement. Oh, Jeremy, how did you pick the stock? So we can see revenue growth year over year. Diapers and wipes are flat. Okay. Peak growth. Skin and personal care down 13%. Household and wellness up 101%. Wow. Even though it's the smallest part of their revenues. Okay. Now, I want to see their guidance. Okay. Because here's the big thing about investing. I don't know if you guys knew this, but investing is about the future. Anything can happen in the past. The past could be a disaster. Everything could go wrong. As long as the future's bright and shiny and it beats expectations, okay, maybe you can make some money in a stock. Well, let's look at the full year 2023 guidance. Without taking into consideration the margin improvement roadmap, they have a roadmap. I drew a doodle on a piece of paper. It's a roadmap that we are currently formulating. We anticipate our full year 2023 revenue and adjusted EBITDA would be in line with our fiscal year 2022 results. What does that mean? That almost sounds like they're saying their revenue is going to be flat because they're saying the revenue is going to be in line with their 2022 results. That's what I take from that. They didn't give like specific number revenue guidance, at least from what I see. Maybe it's somewhere else buried in this report. But if you go look at the prior report, they gave better guidance, okay? They said their revenue, let's see. Our first half, this is their prior quarterly report. Our first half of 2023 revenue outlook reflects 7 to 10% growth over the first half of 2022. Okay, maybe that is true. But they're literally saying they're going to have no revenue growth whatsoever in 2023. And they're not going to be profitable. What a disaster, man. We can go skim the financials, okay? So obviously their revenue's flat, their losses have mounted. Their year-over-year revenue for the full year has declined. Look at that. So quarter over quarter, it's increased. Year over year, it's gone down. Declining revenue for a growth company. And on top of that, their gross margin has collapsed faster than their revenue. Oh, baby. Honest, my bonest. Now, if we look at the balance sheet, let's see if there's anything crazy on here. Cash is down massively. Short-term investment. Wow. They spent where'd all the cash go? So look how well capitalized they were, and we'll go look at the statement of cash flows if it's on here. Look at how much cash they had in December 31st, 2020. They had $50.7 million of cash and $42 million of short-term investments, very liquid investments. Now they have $9.5 million of cash and $5 million of liquid investments. And their inventories, like maybe they just spent a lot of money on inventories. Their inventories have gone up. So they're not selling. They're not producing as much revenue. Their revenue is actually going down, but they're stacking up inventory on their balance sheet. Okay, let's see. All right, nothing else crazy on here. It always confused me, but I think they flip-flopped property, plant, and equipment for operating lease right of use asset. that always confused me because it's like, how did their equipment go down so fast? But that trips me up every time, but I get it now. Let's see. Accounts payable. Let's see. So total current liabilities are $63 million. Total current assets are $189. So theoretically, their current ratio, their current assets divided by their current liabilities looks good, but they also have a lot of illiquid current assets, less liquid current assets, inventory. It's harder to turn inventory into cash, especially with a company that doesn't seem to be growing, as opposed to converting short-term investments to cash. You could sell a short-term investment in a second, whereas inventory, if you don't sell it, it doesn't convert to cash. So their quick ratio, if you take their cash, short-term investments, and accounts receivable, it's close, okay? I mean, I don't think they're going to imminently go bankrupt, but they are not as they're not as liquid as they were, okay? And this was as of December 31st, 2022. So maybe that's changed, okay? So their total equity, what happened to their equity? Well, additional paid-in capital went up, accumulated deficit went more negative, and accumulated other comprehensive loss actually went down a little bit. So overall, their equity, the shareholders' equity went down by $33 million. So their debts have increased and their assets have shrunk, or their liabilities have grown faster than their assets. That's not good, okay? Let's look at their cash burn. So for the year ended December 31st, so we see they have a net loss. We add back non-cash expenses. We look at changes in receivables, current assets, current liabilities. So it looks like they've dumped a lot of money into inventory. Maybe that's an expectation of future sales. But a big difference between their cash flows for December 31st, 2022 versus 2021 is this huge increase in inventory, which, like I said, could be a timing issue. But that's why you have negative 76 million of cash flows, and they have much less cash versus what they had the prior year. And I don't know where they're sitting at right now. That's one of the bad things about financial reports is they're not like up to date. You look at this. This is as of December 31st, 2022. It's March 16th, 2023. Obviously, they're not bankrupt, but I don't know. They're in a pretty tight cash situation. Hopefully, they're able to sell that inventory. All right. They bought some short-term investments. They sold a bunch of short-term investments. So it seems like they took a lot of money and dumped it into inventory. And they really made themselves like really, really scrunched up with cash and cash equivalents. Okay. And that's basically it for the statement of cash flow. So negative operating cash flow, negative free cash flow. Profit margins are decreasing. Revenue growth is flat. There's nothing special about this company. And their guidance for 2023 is, at least from what I read, flat revenue growth. I don't know what to say, man. I don't know what to say. Jeremy, let me give you one more shout out, Jeremy. Here you go. Everybody, I want you to go click on Jeremy Lefebvre, stock market investing, modern long-term investing, and give him $10 a month for picking such an amazing stock. Oh my God. I wish I could just lose money hand over fist and get paid massive sums of money for it. What am I doing with my life? Cloud market is back. AI is the future. NVIDIA, bro. NVIDIA's the future, bro. He is the next Buffett. Your wife buys the products. Okay, first of all, she bought one thing of Honest lotion, and we have not bought any Honest products since. I refuse to allow that in my house. But Jessica Alba is so, I mean, yeah, that's a bullish thesis behind Honest. Was looking forward for this live stream the minute earnings came out. Yeah, a lot of times I don't even know this stuff happens, and then I'll see a comment. I'm like, oh crap, and then I see that earnings came out. So basically, they're just losing lots of money, and their guidance isn't that great. Basically, they're saying their guidance is going to be flat revenue, same adjusted EBITDA. So they're just going to lose money hand over fist and not even grow their revenue next year. Okay, or this year. Lefebvre is the best investor of all time. Of course, that's why he has a bigger YouTube channel. He's richer than me. Laughing my butt off. Lefebvre being haunted by his clownery. It doesn't seem to matter, man. I only need the hymns to 6x to regain my Lefebvre gains. Yeah, man. You 100% will get it, okay? I believe in you. Let's see. Strongman, why'd you change your name? I made a video about it. Go check it out. Change your name back. Topless Man, cover InMode and StoneCo. Enough about the failing banks. I've covered InMode. Okay, I'll look at InMode again. I mean, I've covered it. InMode like was weird. It was like too good to be true almost. With the dwindling cash, Honest Bond be in real trouble by the middle. Yeah, they dumped a lot of cash into inventory. Like, hopefully they can sell it or they're in trouble. That's weak inventory control. I don't know if they were expecting some kind of huge sale in the future, but you could see at the end of that year, they had basically not much cash and a huge amount of inventory. So I don't know. I'm ashamed you make videos for money. Graham, Andrei, Kevin say they do it because it's fun and they truly enjoy it. They care about us. Yeah. That's so true. Let's see. Jeremy thought if he holds 10% of Honest, he will go see Jet. That could be his goal. Tattooed Chef was supposed to have earnings. Really? Man, I have not tracked these companies that well. I've been so bad about tracking these companies because they're just so crap. It's like nobody even talks about them anymore. They're just that bad. That's how Jeremy wins. He just loses money and then everybody forgets about it. And it's like, okay, yeah, here's $8,000 a month, $9,000 a month in Patreon money. Let's see. No matter what company Jeremy buys, they all end up trading at $1 to $2. Don't say that. He bought Meta. Let's see. The inventory increased so much, but will revenue be the same? That's what they said. That's how I read the guidance. The guidance says our revenue will be the same as 2022. That's what I got from that. Okay, so literally no revenue growth. Check Fubo. Oh God. All right, guys. I'm gonna eat lunch and then maybe if I have time, I'll cover some other clown stocks. After this, your name is Reaper Lafufu. He doesn't care. He got away with it, man. He's good. It didn't affect him at all that he bought all these terrible companies. No consequences whatsoever. All right, guys, that's it. That's honest earnings. Not impressive. I don't get the appeal of honest stock. I don't know what else to say. Have a wonderful day.